otherwise, just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's life.com. Priceforlife.com.
I think there's kind of a couple things like, how to take advantage of opportunity, tax loss, profit conversion, payment strategy, tax loss harvesting.
Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates. The weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, happy Saturday to you. This is The Real Money Pros. You can't catch too many live programs on weekends, but you got one right now. It's not a news program. We can talk about some of the news. We can talk about some of the economic effects of what could be at least a regional war. It may be a little bit longer, more extended than just the very short war that we were at least told about at the beginning. We got to talk about markets. Jeremiah Bates is here, but we can also take your phone calls during the program at 979-59-MONEY. And whenever you like to call the program, any topics, fair game. We are both fiduciary financial advisors with lots of experience. We can cover estate planning, questions, and taxes, and all kinds of things. If you want to even talk insurance, yep, we'll do that too. It's therealmoneypros.com. That's how you find us. All sponsor supported. We're not selling you a thing. Let's talk about money.
Money makes the world go round, as I like to say. And obviously, there is that intersection at some point of what's happening from a geopolitical side of things to what's happening in your retirement accounts, your investment accounts, your 401ks. And, how do you parse out the noise? And how do you make sure that, number one, there are some opportunities in light or in response to these bouts of volatility. And again, we've said it before, and I'll say it again, that volatility in the market is not a bug, it is a feature. If the market just was linear, meaning we would see a 8 to 9% step up every year of compound growth in the market, well, that just wouldn't exist, right? Meaning everyone would jump into it and everyone would see those gains. But the reality is that's not the case. You're going to have years where the market does really well. You're going to have years where the market's flat. And you're going to have years where the market is getting kicked in the shorts. And we are in a point, and this is not too dissimilar from last year. I mean, really right around this time, Liberation Day, where the announcement of tariffs, and we saw a much steeper sell-off in the markets than what we see now. Now, this is not comparing apples to apples because we were talking about a motive from that administration based on trying to make trade more fair and implement tariffs and the strategy behind that. Now we're looking at the uncertainty of what's happening with oil, how that could relate into inflation, how long will this conflict last? It was interesting looking at a report and looking at these different scenarios, meaning the probabilities, particularly around oil and what that could potentially, how those waves could lap across different shores. But meaning I saw a report that said 60% of a short-lived spike, meaning we might see oil hover around $100, maybe a little bit more per barrel, and then by the end of the year, we'll see it moderate close to $70 to $80 a barrel. A 30% probability of we actually see an oil shock where we're hovering close to $150 a barrel,
Yep.
And then the least probability was a quick de-escalation, meaning like within the next few weeks that we see oil moderate back to $70 a barrel, which is kind of where it was hovering before we saw this conflict take place. I think obviously there's a probabilities. No one has the forecast, right? But this is a case where how this administration wants to approach this conflict, meaning is this a long, drawn-out campaign, then I don't think that's going to be a surprise to anyone for that matter, where we do see oil range bound maybe around that $100 per barrel. Well, then that's going to translate into higher gas prices. That's going to change expectations with inflation. That's going to change expectations how the Federal Reserve approaches interest rate cuts, which they did have their interest rate announcement this past week. Of course, they held rates steady. But what's interesting was the comments that were made during that Jerome Powell during the Q&A session, and he went out of his way, which again, you do kind of got to look at this approach a little bit because I don't think it's going to be a surprise to anyone for me to say that President Trump has been very outspoken on his dislike of Jerome Powell's approach. I think Jerome Powell would reciprocate that to President Trump, but he made it a point to state that the Federal Reserve is paying close attention and not looking through this rapid ascent in the price of oil, which is interesting because historically speaking, the Fed goes out of its way to say, hey, we understand that
we're going to remove that.
Exactly, which they have in these inflation reports. That's why they have the headline number and they have the core number, and the core number removes cost of food and cost of energy, which again, it's kind of funny because everyone has to participate in paying for food and energy. I digress. But I just did find that interesting for him to make that statement of like, okay, here's what this administration's doing. They are the one basically executing this campaign against Iran, and now we're looking at higher oil prices, and we are paying close attention to that, which we are going to take into our decision-making process for what we're doing with interest rates, because the expectation of the market is that we were going to see interest rate cuts this year. But if you're looking at high oil, high inflation, and we start to see those numbers flow through, we could see this effect happen across the board.
There's a lot to unpack here. And if you look at it, holistically, like really what's going on here is that we do have an administration that's very closely connected to economic performance, meaning there's a lot of touting of economic performance. Here's what's happened. Here's where we're going. Here's how we're going to strengthen our economy. And in a war, dismantles that, at least a long war does, to the point where, if I read this right last night, Jeremiah, it said that Trump has backed off on certain statements, and he even said that he's considering winding down the war with Iran. Okay, what would cause that pressure for a president who very much likes the headlines of performance, which means I think that he has not found a solution to the Strait of Hormuz and being able to continue the oil flow throughout the world. So instead, Iran is doing exactly what we would talk about doing, which is you would beat them, you'd want to beat them economically, meaning this war is already about money.
Yeah.
Because that's exactly how Iran is fighting it. They're going after not only U.S. bases, apparently, but obviously they're now threatening even tourist areas, but they were targeting oil production that is in the surrounding nations, trying to get them to put pressure on the United States. And so I don't know that we're going to see a quick end to this one. And of course, there's some dismantling going on inside the administration with the cabinet members, the whole bit. And so how do you think this will come out? And do you think mistakes were made? Do you think that we're going to stick with it? Does President Trump have a plan? Do you believe that he's got a plan to take us through this? And please tell us, what do you think it will involve? 979-596-6639. That's 979-59-MONEY. Now, when I found out he couldn't get support for the Strait of Hormuz, and he's reaching out to other world governments, now to include even China, to see if China would come out with their Navy and try to protect the Strait. He's doing it, and obviously he has to appeal to these nations from an economic standpoint, which is this is a way that you can continue having your economy flowing with oil prices and stuff, but you've got to help us keep us safe. But he's getting shunned, being told no. Even by nations that we thought were even extra friendly with us, the answer is no. And this is where I look at it saying this is where diplomacy would have made a difference. To get the same effect all the way up to now with diplomacy mixed in, and he probably would have gotten that. But now it looks like it could be either a longer war or something that we pull out of, now wondering what we did in the first place. Phone lines are open, 979-596-6639. Every American life matters. In fact, every Iranian life matters for all that matters too, which is we've got to work this stuff out. We'll work it out. Let's talk about the economy, the economic effects of it, because the last time I had seen oil prices shoot to these levels was I think it was it roughly 2008, maybe 2007. Went up to, I think, roughly $135, $140 a barrel, if I do this right from memory. And gasoline prices shot well through $5 in just about every state. I think approaching $6, $7 in some places, but it was very short-lived. Oil companies did well for a quarter or two on their earnings reports. It benefited them. The concern at the time is the same concern now, which is the nations with oil-rich lands that cannot sell their oil typically, or they're selling it at lower prices, are getting the best prices they're ever going to get. And so we need to see a quick end to this, and the U.S. oil economy works just fine.
Yeah. I mean, I don't even think you need to go, you can go a little bit, not as far back in history where, the Russia-Ukraine conflict, where we did see a dramatic jump in oil prices. We saw gasoline, I think nationwide average price was over $5 a gallon. And, that lasted a little bit. We had inflation at, what was it, like it was over 9% in June of 2022. So, again, you got to look at that length of time that lasted. We got past it. Things keep rolling forward. And so the big question now is what this comes down to, which no one has the crystal ball that we could really tie down, is how long does this conflict last, which means how long do oil prices stay elevated? How long do gas prices stay elevated? How long does this affect the price of food transportation, which would trickle down into all these inflation numbers, which again goes back to your original point, Brian, that this administration has been adamant about bringing down inflation, lowering interest rates, lowering gas prices. This almost is this is a total counter effect to that with the progress that has been made.
All right, so how long does it last is ultimately the question, but let's ask a better question. How long should it last? Call the program, 979-596-6639. How long should it last? To what objective? Give us an idea of what we're all thinking. It's America. This is Real Money Pros. Make this year that you work smarter, not harder, with Ataraxis. As your strategic partner, Ataraxis becomes an extension of your business, taking the burden of HR, payroll, benefits, workers' compensation, compliance, and staffing off your plate. You'll have more time to focus on operating and growing your business. Let Ataraxis handle the details so you can focus on what matters most. Learn more at ataraxis.com. That's ATARAXIS.com.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
This open enrollment, start making meaningful progress towards your long-term financial goals. Did you know that a health savings account, or HSA, is the most tax-advantaged account in the U.S.? Contributions are tax-deductible, which reduces your total taxable income. Withdrawals for eligible health expenses are also tax-free. And last, capital gains on investments are also tax-free. Did we also mention that it's free for individuals? Visit livelyme.com/pro today. That's livelyme.com/pro.
to the Real Money Pros.
We are back. This is the Real Money Pros live financial program right here on the weekends. I'm Brian Wiley with Jeremiah Bates. You can find us online, not only at therealmoneypros.com, podcasting, of course, you can find us on your apps, but you can also watch us on YouTube. I got a matching hat to the shirt. My shorts match.
And your shoes. You
It's
can't
a
see them on
Saturday
camera,
here
man.
as well. That's
well
right.
coordinated.
Jeremiah Bates is here. You look like you were just in Hawaii or something, but you weren't. So we finally get nice weather out here. It's 80 degrees outside. So, man, I do like our city and the fact that we enjoy our nice weather, especially when it just starts. 979-596-6639 is the phone number. That's 979-59-MONEY. With all the events that are going on in Iran or that are happening even within our own nation, oftentimes I think that we get stuck in the spot of thinking that this is all brand new, this has never happened before, this is the whole thing, that it's going to create big changes. And you've got to kind of take a step back and think of how many times have you thought that in the past? I thought that the millennium bug was going to be the end. I was pretty well sold on the idea that it was everything was going to crash.
Yeah, Y2K.
Yeah, the electrical grid was going to just die, and people were doing extreme things, and I was so resistant to doing anything, but I did finally just submit. I went to the bank, and I think I got like $1,000 of cash. That was it. And, of course, that blew over. It was much ado about nothing. And then we go through wars. Iraq starts in 2003. We are already in economic decline. We had September 11th. We've had markets that get crushed. And I remember in every case thinking everything's changed now. It's all different now. It's never going to recover, and starting to believe it myself. Then you go through the Great Recession. And then we go through COVID. And we finally end a war that was 20 years long with Afghanistan. And there is one thing that has always been the case in the 26 years that I have been a financial advisor, is that the markets did eventually recover. The way I see it is that, and typically led by U.S. markets is in recoveries, is because it's kind of in the way that our fabric of our nation is actually built. We're survivors, right? We like to improve. We see growth. And we like to see continued growth. We don't stagnate. That's what happens. What will happen in this war, or whatever the length of it is going to be, is that, yes, we're going to see downturns. And we've already seen a downturn from an economic standpoint. The longer this goes on, the more effects it's going to have through everything. Our food supply, delivery costs, all kinds of different manufacturing costs will go up. Consumer prices could go up, the whole bit. The economics, we already know, is driving what is happening in Iran, because there's so much talk about the oil. And so we already know that there's a sensitive administration to the economics. So I'm still going to make my vote for the American economy is going to recover first. And those of you that have had even the moment of thought that you're going to take your investments out, I would really discourage you from doing so. I would stick to the plan. If you've not seen the better buckets and the way that we handle things on the Real Money Pros, we really want to encourage you to do so. Again, it's all sponsor supported, and you can ask us questions on the website, and we actually get back to you.
Well said. I mean, if you look at the simplicity, the beauty of the better bucket system is that it is simple, and we've seen events that are much worse than what we've seen at this point.
We designed it for this.
Exactly. Yeah. I mean, it's been stress tested. We know it works. And by work, meaning that if you are, prime example is a meeting that I just had yesterday with clients that I've worked with for a very long time, where they wanted to downsize their house. They sold it, and they, while they were waiting for their original house to sell, we had to kind of recalibrate things, tax efficient, the whole thing, but everything was going according to plan. But they could feel a little bit of pressure because that house was not moving at the timeline that they had forecasted. We were starting to get a little bit behind schedule, but we had prepared for that scenario following the bucket system. But now we're at this point where the house sold. They're walking away with a big lump sum of cash. It's going to pay off that existing mortgage that they put to acquire the new property. There's going to be a significant amount left over that then we need to bucketize to make sure it funds their cash flow, it funds their lifestyle, because the only items in retirement that they're going to have is two forms of Social Security, which are when there's about a gap. So in about 5 years, that Social Security combined should make up about 50% of their annual spending. So meaning we got to make sure that these assets are structured in a way that it's generating income, it has protection to fight market volatility, but you also have your growth assets that are able to take advantage of the long-term trajectory of growth that the market has shown over zoomed out periods of time, especially when you look at it a 10-year period. But that was a question that popped up. It was like, well, the market's doing this. Is now a good time? I'm like, that's the beauty of this system is we don't need to be at the mercy of the market. We are strategizing. So whatever the market does, that we're prepared for every scenario. Now we're doing this right now, but I have clients that we've done that same thing a year ago, 2 years ago, where we ran into, when Russia invaded Ukraine, we were prepared for that. For the tariff fiasco, we were prepared for that. For this Iran conflict, we were prepared for it. Not like we have the crystal ball knowing exactly what risk is going to happen, but the reality is we know that there's risks that are going to happen year over year. So you need a foundation of how you're managing your assets to be prepared, because you have to understand the psychology around these things. And there's so many news outlets that are so great and social media that do such a great job of bombarding you with, these worst case scenarios. And what that's going to trigger is survival instinct. So if you're looking at something that's happening in the world that could potentially affect your money, can potentially affect your safety, can potentially affect these items that we hold dearly as just human beings, survival instinct kicks in, and that stress part starts to kick in, and then you really feel that urge that you got to do something. But then again, you look at things historically, and Brian, to your point, we see the market recover. We see the market's fluid, meaning it's going to move with how these events go. It's not like one event happens and then what we've known as an economic system completely ceases to exist. I mean, if we get hit by an asteroid, which could happen, hey, we could see something along those lines. But again, do you put all your eggs in that basket for the very slim probability that would happen? No, but you also understand that there are risks out there. Be prepared for them, but don't let that tail wag the dog. Strategize around it, and then also take advantage. Be opportunistic. There's strategies that you can put in place right now when the market is being volatile, meaning don't be pushed back on your heels of like, I'm reading these headlines and I'm just every day I see the market going down. Like Friday's trading session, we saw the Dow Jones and the NASDAQ officially hit correction territory. Now, it didn't finish in correction territory, but correction just means that we're 10% off of those recent all-time highs. We've entered into that. So now it begs the question, what are you doing? Like, what was your plan for that? And if you're like, well, I didn't know. Again, I would argue that this is a good time to plan, recalibrate, and make sure that you structure your assets in a way where you can withstand volatility. You're able to take advantage of volatility, make tax-efficient moves, make good gifting moves, whatever the case is, and that you also aren't selling assets at a loss to fund your lifestyle.
So you think about the events that went through, and you're saying, well, how did we handle that? You handled it because you knew that the money you needed was there, and it was going to remain there because it sat there as cash when it needed to be cash. So think about COVID. We didn't know how long the lockdowns were going to last. Nobody knew. We didn't even know how bad it really was, and I'm talking about the onset of it, and then the news about all these people dying around the world. It looked like it could have been an extended event, and our clients were asking the question, which is, what do we need to do? And even those that were just taking income needed to know through just having the discussion that they were okay. They had enough set aside to be able to handle years worth of what they needed. This is the Real Money Pros, and that's the Better Buckets. We'll be right back.
Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to the Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. This is the Real Money Pros. Phone lines are open. 979-59-MONEY. That is 979-596-6639. I am Jeremiah Bates. He is Brian Wiley. We are fiduciary financial advisors here at your service. Obviously, we're talking about market happenings over the past week, 2 weeks, arguably, this Iran conflict. What are your thoughts? Do you think that there's a positive outcome to this? Are you willing to withstand this potential market pullback? Not too dissimilar from what we saw with the tariffs, meaning many people that I talked to said, hey, this is actually worth it, meaning this fight, we're willing to take on some volatility. We're willing to see our assets go down in value based on, it's like that old saying, take a step and a half back for multiple steps forward. Do you feel that this is the case right now? Do you feel that the price of oil will be range bound? Is there an anticipation that you're going to have to budget for higher gas prices for the foreseeable future? Because that's certainly going to have an impact across the board, whether we're looking at your household cash flow or we're looking at your retirement accounts, savings accounts, and how you're approaching it from a strategy standpoint. And speaking of strategies, we can talk about things that you can do and execution from an action standpoint of how do you take advantage of volatility. yes, you could look at the headlines, you could look at your account values going down and feel those butterflies and feel that, and just let it ruin your day. Or you can look at this from a strategic lens and say, okay, yes, the market's doing what it's doing, but in light of this, I know what the game plan or protocol is to take advantage of this. Because again, volatility equals opportunity, not just risk. Yes, there is risk involved with it, which we just talked about in the last segment. That's where the better bucket system comes into play to help you avoid that volatility risk, meaning you're not having to liquidate things that are getting beat up just to fund your lifestyle. You do proper protocol of putting a timeline on your investments and making sure that those timelines are solved for with tangible financial targets. So meaning if you, Brian, if you wanted to put a roof on your house this year, you got to make sure that a potential geopolitical conflict doesn't prevent you from putting the house on your roof this year.
Or the roof on the house.
yeah, vice versa, right? Okay, so let's talk about some ideas that we can look at, because we're pretty close to correction territory, and this is where, in my opinion, you could start to executing some of these. Tax loss harvesting, meaning if you are in a non-qualified account, it's not held in your Roth IRA, it's not held in your traditional IRA, it's not held in your 401k, meaning you set up an account with, maybe it was Schwab, Fidelity, E-Trade, whatever the case is, you set up that account. It's in your name, your spouse's name, or you did some estate planning, and it's in the name of your trust.
And you get a 1099 on it every year.
Yeah, that's it.
Okay,
that's actually
the other one.
That's actually a great point. I mean, tax season is right there. If that account generated a 1099, that is the account that I'm referring to.
Yes.
The investments that you own in there, you got to understand the tax consequences if you buy or sell one of those assets. Meaning, if it's, let's imagine you bought a stock at $100, and then that stock gains to $200, and you sell said stock, and that happens inside your non-qualified account, you're going to pay taxes on the gain of $100. That's not the case with tax-deferred accounts like an IRA or a Roth. So we're just talking about non-qualified accounts. So in this scenario, with the market doing what it's doing, you might be in the exact opposite scenario where you bought a stock for $100 and now that stock is worth $50. You can strategically sell said stock, book the loss, have that loss in your back pocket. Those proceeds from the sale, you can go invest in something. Hopefully it's similar in dynamics as far as the actual investment. Be aware of the wash sale rule. If you want to go back and buy that same stock in this example that you sold, you got to wait 30 days to buy it back. But the idea is this. You are taking advantage of a market drop to lock a capital loss, which can offset income. I'm going to give you a perfect example of this, of what I did with a client last year. They ended up needing some cash this year, unforeseen, and we invested that account for growth, the third growth bucket, if we're following the better bucket system. Last year, during the sell-off that we saw in the response to the tariffs, the Liberation Day, we were able to tax loss harvest that entire account. We booked about $10,000 of capital losses just through that move. And then immediately we reinvested the money into similar investments that we knew would have a good growth trajectory. Obviously, we all know what the market did last year and the beginning part of this year. So they're still seeing great gains. And this unexpected liquidation event that they needed, well, when we were having the conversation, he's like, geez, well, aren't we going to get kicked in the shorts from a tax standpoint? Because he's like, well, because they didn't even look at the account. They didn't know how much it had grown. They're like, wait, it grew this much? It's like, yeah. He's like, well, we're going to have to pay taxes on that. I said, yes. And I said, but do you remember the tax loss harvesting that I did last year? He said, no. I was like, well, let me remind you what it is. And I told him, hey, here's what we booked last year. Some of that's going to eat away your income for your 2025 tax return, but we're still going to have $7,000 of losses in our back pocket to offset the gain. So the reality is your tax bogey on this is going to be pretty much negligible. And he was blown away. He's like, wow, just from doing that? I'm like, yes, it's tax loss harvesting. It's what you do.
Well, I think oftentimes we forget about the actual tax consequences of a great gain. So you can talk about hitting it big on some stock or anything for all that matters. And if you bought it and sell it within the first year, then it's going to be taxed as ordinary income, and your state may tax it as well. So we're talking about when you have income taxes, that could be 32%, somewhere in there. I mean, it's 24% depending on what your income is. you probably want to actually not want to take those gains as ordinary income if you can try to avoid it. So then you just have that simple conversation, which is, can I wait a year and a day and then sell it and still come out with a similar result? Even if you got less money at the sale, if you ended up more because you paid long-term capital gains instead on it versus ordinary income, which who knows, maybe even your income tax rate meant that you have zero gains taxes on long-term side. All right. So when you start mixing all this stuff around, it starts to get a little confusing. But if you have gains that you know that you're going to be taking in the future, but you can see losses right now, temporary, and you feel like, yeah, long-term wise, I still like this position or this investment, so I can sell it, wait 31 days, go back, buy it again, and then continue to hold it, through a recovery. That's exactly the type of case that I believe that we're in right now. It's the same thing that happened with COVID. It's the same thing that happened with the tariff announcement last year, which is, I believe that it's very temporary, and now is a great time to just reassess and say, can I take advantage? Even if I'm so nervous, I don't want to buy into any markets and I'm really considering selling, maybe it's going to justify some of the selling that you want to do, but you're going to actually do it for tax reasons and for a reason that is written down in front of you, not because of feel.
Yeah, no,
right?
100%.
Yeah, you've got a
well
reason to do it because there's maybe a good tax advantage. And I've said this for years too, which is, most people don't know that they're overpaying in taxes. And as an advisor, if I could find even 2 or 3% of their income to save them in taxes, in theory, if I'm also investing their money, it does then relax the growth rate I have to shoot for in the plan. So meaning simple tax reduction also means that we could actually lower expectations of investment returns in the future because we don't have that high demand because of the overpayment of taxes, which also means that we could reduce risk, which then also reduce fears and emotions. And there's just a great approach to actually, if you start with the taxes, you can solve a lot of other things.
And a lot of it's so simple. I met with a household. This was about 2 weeks ago. Business owners making great income, sharp, savvy. We're putting together some planning for their business exit and actually how does that translate into funding their lifestyle through retirement. But in that conversation, they're really focused on that piece. And then, I just put in a little quick question that seemed pretty small at the time. It's like, okay, let's talk about healthcare, because she brought it up. I'm really concerned about that cost when I retire, how much we're going to have to pay, because currently it's covered through out of our business. But if business has gone away, then we have to pay out of pocket for essentially full price for health insurance. It's going to be this amount. Obviously, we talked about affordable Obamacare, the legislation risk that's tied to it. And then it quickly led to, well, is your health savings, or is your health insurance HSA eligible? Yeah, it is, but we don't like putting money into it because if we do and we don't use it, we lose it. I'm like, not the case. That's a flexible spending account, FSA. I'm talking about an HSA, health savings account. That is not the case. You can put money into it, you can invest it, you can use it as a long-term growth vehicle. You can even convert that to an IRA down the line if you want to. And I'm like, oh my gosh, I never knew. And I said, well, you can max fund it with about $10,500 for 2025. And based on your marginal tax rate of 22%, that's over $2,000 that you're going to be able to keep in your pocket.
Plus state,
right? So it's even more than that. And they're like, really? I'm like, yeah. So it's interesting how a lot of times the focus is so, to steal your term, myopic on, what the market is doing, and it's up and it's down. But just by moving money from one account to the other that you are totally eligible to do, you're going to save $2,000. I mean, you're going to keep over $2,000 in your pocket just from moving money from one account, and it's extremely easy, and it's all above board. And those are the things that are important to pay attention to, and I bring that up because it's similar to the tax loss harvesting, where it's like you may not be chomping at the bit to make a move based in light of market volatility, but these are the moves that need to be done that compound over time, just like that HSA example. And I didn't want to rub salt in the wound to talk about the previous years, but the years that they were eligible, not putting money in there, that probably would have kept more than $10,000 in their pocket over the past 5 years.
If it's a liquidity problem, some people saying, "Well, I don't have the cash to put in there that I can leave in there." There's probably a reason. There's probably a way that you can pull some of it back out, because I'm going to guess most people have spent money on medical issues that they didn't know were reimbursable, and that you can still go back and take them back. This is Real Money Pros, 979-59-MONEY. Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Have you ever met with a financial advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit TreeCityAdvisors.com and start your journey to financial freedom now. That's TreeCityAdvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Back to the Real Money Pros.
We are back. This is the Real Money Pros. Visit us at therealmoneypros.com. That is our website. You can get access to our educational content, previous archive shows, our podcast, sign up for our newsletter. You can see the great sponsors that help drive this program. We are not here to sell you anything. We are here to give education and advice. And if you want some specific education advice for you, call us. We are live. Phone lines are open. 979-59-MONEY. That is 979-596-6639. You have Social Security questions, estate planning questions, investing questions, retirement questions. What's a Roth? What's an IRA? The next hour, we're going to bring it back to the basics. Had an interesting phone call with someone, a family member. I'm not going to reveal names just in case they're listening to said program that we're on right now. She's smart. She's savvy, makes good money. And she was asking me some very, which I, again, take it with a grain of salt. And I was telling this to you, Brian, over the break. Like sometimes you're in a career for so long, so something for you that seems so baseline and basic, but to the uninitiated, someone's not paying attention to it. They just don't know. So she called me, and it was a great conversation, but in my mind, she was just asking me some of the most basic questions around taxes and retirement accounts and how they operate. I'm like, geez, this is just a great opportunity. The fact that we're right around tax time and there are opportunities to put money into these various accounts. Let's bring it back to the basics and understand what they're there for, what opportunities they actually provide, and how it works from a tax flow and what it actually means to you. But let's piggyback on strategies that we can look at executing when you're seeing bouts of market volatility. The last couple of weeks, the one comment that I've been saying is like, well, it's, we're not too far off all-time market highs, so let's just pump the brakes a little bit. Well, we're still starting to see some market action that has continued to the downside, where I mentioned on Friday, we saw the NASDAQ and the Dow Jones 10% lower from its all-time high, aka correction territory. That's the rule when we're looking at that correction term. So again, what things that you can look at doing when you're seeing a down market? We talked about tax loss harvesting and how that can affect your net tax bill. Let's talk about gifting. That is a conversation with a lot of my clients that have appreciated stock or they have appreciated assets, and they want to find ways to efficiently gift to their kids. And this is a great way to do it. Now, you got to understand that for 2026, the annual gift exclusion is $19,000 per person. To be clear, if you gift more than $19,000, there's no taxable event. There's no
You can send them $1 billion.
Yes. Honestly, you could. You could send $1 billion, and the person who receives it doesn't pay taxes this year, and the person who gifted doesn't pay taxes this year.
But you got an issue now when you die.
Yes.
So,
that
just gave away a little bit too much.
Yeah.
A bunch of it's going to be taxed. They're only tracking the person who gave the money. So then they can deduct it or reduce the total amount that is excluded from tax when you die. So they're just making a spreadsheet. Okay, you gave more than $19,000. How much more? Oh, $10,000 more. So we're going to reduce your total lifetime limit by $10,000 for that year.
Yeah,
so that's simple.
That's a big misconception. A lot of individuals that I work with, they think if they go above and beyond that number, then it's like, oh no, like we're running in some bad tax stuff. Not the case. Now, when it comes to this gifting strategy, case in point, ran into this situation last year where a client that I work with, he's got a significant amount of holding in Micron, and Micron's done extremely well. Over the past year, it's up over 300%. And obviously, it's a part of that AI narrative. I'm not advocating for you to go out and buy Micron, just giving you the direct numbers and the specific stocks so you get the point for illustrative purposes. He likes Micron. He's got a lot of it, and he wants to gift money to his son. I said, well, what about Micron? He's like, well, what are you talking about? I'm like, why don't you gift him shares of Micron? I can do that? Yes, you can. You can gift shares of Micron. I mean, because what he was actually going to do is liquidate said Micron, liquidate shares, meaning he would have to pay a capital gains tax on that, then take the cash and gift it to his son. I'm like, I know where you hold your Micron shares. Does your son have an account there? Yes. Just pick the shares and we'll just transfer it right over to him. Make sure we're right at that annual exclusion amount. Then you don't have to file a gift tax return. And then he's sitting on an asset that we all agree is a good long-term holding that can give him a kind of a boost in his investing journey.
He does inherit the cost basis, though. So the person who bought the Micron shares in that case, let's imagine he averaged probably awesome, $70 a share. Now they're worth over 400, and let's say the son gets those shares, a whole bunch of them, and then sells them 5 years later for even more money, would have to go back and look at that $70 number, and then the difference is going to be the gain. So that's the way that works, but there's no taxes on giving money to somebody. A gift tax return will have to be prepared by the person who actually sent more than $19,000 to a person, and all it is a procedure to edit the spreadsheet.
100%.
That's it.
Well, and then in this case, his son, his taxable income was so low, we kind of ran the numbers and said, well, if he did in fact decide to sell that stock, even though he did inherit the basis, or he did from that gift, he did get the basis of his dad, even if he turned around and sold those Micron shares in this example, he would pay zero capital gains tax. Versus if my client sold those Micron shares, he would pay at least 15% long-term capital gains plus a net investment income tax on top of that of 3.8%, plus that income would then be added onto his state tax return. And some states charge capital gains tax, some don't. They let it flow into the actual just state taxable income. So meaning you just look at these efficiencies where it's like, great, you want to do this? Well, if we do this, here's how much money you're going to save in taxes. You still get the same result, and it's more efficient for your child if they were to go ahead and sell it. So point being, in light of this market volatility, if you're looking at those assets and you hear that scenario, and you're like, wow, that's actually a really good idea. This is an opportunity where you could maybe gift more of that asset because the value of it is down. Because if you're like, well, I don't want to have to file a gift tax return, I want to make sure I stay under that $19,000 per person. Well, in theory, if you own shares of something, which at this point in time are less value, you can gift more of it, staying under that $19,000 per person annual exclusion. gift that asset to whoever you want to gift it to. It could be a charity, it could be it could be an heir, a child, whatever you choose. And then you're kind of future-proofing also the appreciation of your estate as well. Meaning if you're looking at potential taxable estate, which limits are high right now, but this is a way you can do this year over year on an annualized basis to try and reduce your estate so you're not paying an estate tax, or AKA death tax.
You had brought up the whole idea of actually donating to a charity. Do that before you sell the stock. So most churches, most charitable organizations, the 501c3s that you can actually get the deduction for the donation. You send it to them, let them liquidate the stock. And you're going to then be able to avoid having to go back to your cost basis and having to pay taxes on long-term capital gains, then making, let's say, your tithe to a church. Why not just do your tithe in stock and give them the stock that way? Then you don't have to worry about making sure that you met your standard deduction, the whole bit. The charitable organization still gets the same result. There's one extra thing that has to be done on their side, is they would have to execute the sale. But if you think about it, you do the donation now, maybe they don't need it right now, and they can defer the sale, get a little bit of a recovery, and it actually benefit the charitable organization even more. Those type of tax tips, by the way, are really hard to come by. So if you go to a CPA or a tax preparer, especially now, they're going to be so just focused on making sure that they get the basics that they need to be able to submit a tax return. There is no tax planning going on right now. That just will not happen, at least with any qualified tax preparer that I know, because they're too busy to actually start doing the planning or what can make it much more efficient. They might give you the big ideas like, make the HSA contribution or make that IRA contribution for last year, and it'll save you money. But it's when you get down to this, which is, I tithe to my church and I've got all this highly appreciated stock that I inherited or whatever it might be, and I'm concerned about the taxes, we'll just donate the whole stock. That type of tax advice happens right here on the program, but also usually with really good financial advisors. And if you're in need of one, go to therealmoneypros.com. Read about us. Apollon Wealth Management is the team of advisors that we know around the nation in places where you are and able to serve you. But also, we have all kinds of free information on our website. We're not trying to sell you anything. We have sponsors, we have partners on it, and everybody does great business. But the idea here is that we're trying to make it more efficient. Then your investment return expectations should be lowered, which means then you take less risk, then you're reading less headlines, and you're actually probably going to worry a lot less. That's why the better buckets work. And it's a free concept. You just learn about it and then just apply it to your own situation. Even the calculation methods work for most people. 979-59-MONEY. That's 979-596-6639. We're getting back to the basics. Jeremiah Bates, I'm Brian Wiley. This is Real Money Pros.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
Waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financial goals, visit therealmoneypros.com. That's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buy-downs that help lower your monthly payment for the first several years of your loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected, subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Bar and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. And need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's price, the number 4, life.com. Priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO.
Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates. The weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, happy Saturday to you for hour number 2. This is The Real Money Pros. I'm Brian Wiley with Jeremiah Bates live right now. You can call the program whenever you'd like. 979-59-MONEY. That's 979-596-6639. Go to therealmoneypros.com. Send us an email, questions there. They don't have to go on the air. We don't have to read everything on the air. We do like to read things on the air, so if you ask great questions that we think other people are also looking or should know the answers to, we're going to read those as well. So please go to therealmoneypros.com. What we do notice is that a lot of people will hesitate to ask basic questions because you feel like you're setting the whole class back, right? I do remember this even in college years of, man, being embarrassed to hold my hand up, especially like even in a math class where math is like climbing a ladder. You cannot miss a rung. You've got to get each concept to continue on. And there were times where I had to just say, man, can we just re-explain something? If you're feeling the same way about any financial topic, please bring it to us here on the program. Call us. Just say, hey, talk about this topic. I had a friend that had obviously referred another one of her friends to give me a call because they were going to inherit some money. And so the call was pretty basic, which is inheriting a home that doesn't really have any debt on it, but it does have a sideline debt, a HELOC on it. They're wondering, how do they pay that off if there's no bank account assets of the deceased person? And simple questions like that. And what I did notice, and they were talking about credit card debt of the deceased person and so on. And they said, we're trying to scrape all the money up to be able to do this. And I said, okay, hold on. did you hire an estate planning attorney? And the answer was yes. And I said, have you actually sat down with the estate planning attorney and started asking them questions about what does this all mean? Like, what does probate mean? What's the process? What is the judge going to do? What is the process in the state they live in as far as notification goes and so on? But what about the basic education, which is you do not inherit a deceased person's debts. Unless you were named on the debt, you are not going to have to pay that debt off. Now, the deceased person may have some value in their estate, may have equity in the home, may, like in this case, a free and clear home with just a little bit of a HELOC on it. And if you can't come up with the cash to be able to pay off the HELOC, and I had asked one question, which is, did the bank actually record the lien on the property? And they said they had looked it up, or their estate planning attorney had said, no, the property's clean. I said, well, then the bank can't even foreclose on the property. It's not even tied to it. I said, so there's got to be a basic education provided from your estate planning attorney to you to be able to talk about these things, about what you may have to do for the estate to be able to settle it out, which is you'll use the estate's assets to pay off its debts. And if there's not enough there to pay off the debts, then that is risk to the lenders. That is when they experience the risk and the reason why they have to price risk appropriately, because sometimes that happens.
Well, yeah, and this really kind of came down to the fundamental understanding with, because there's inheritance and there's this whole idea of probate, which is kind of vague for a lot of people. And then obviously we talked about trust planning and like the intersection of all this, right? But in this particular case, because Brian, you and I were on the call. The way it was explained, it sounded like, no, there was nothing in the estate. Like there was some credit card debt. And it's like, yeah, we don't have the money to come up with it. But then you're talking about these assets, like this real estate that has, obviously significant value to it. I mean, 300, 400,000, maybe a little bit more when you combine it all together. And it's like, well,
no, it was a lot more.
Yeah, it was a lot more. I mean, that was just one piece. So then in my mind, I'm like, well, actually the way the order of operations of this works is actually relatively straightforward. Going through this whole probate process is you're going to take inventory of everything. You're going to take inventory of every asset, and then you're going to take inventory of every debt, which, by the way, through this probate process, there's a reason why you have to do a public notice, like a public notification generally in a probate. Like in a probate, right? Yeah. No, but like there's a word for it, but like in a publication or like a newspaper, right? Like you have to make a notice that this person passed away, so then it can notify potential creditors. Maybe it was a private note between them and a friend, right? Where there was a loan given, and obviously that's not like reported on some credit reporting thing that you may not know about, but that's the reason why. So looking at this, it's the whole probate process. It's taking inventory of everything, making sure that people who are owed money, they actually get paid regardless if the person is alive or not. And then whatever's valued at that estate, you pay off said creditors, then you're left over with that amount. But then it runs into, okay, if you want to maintain an asset, maybe it's a piece of real estate. If you want to maintain something that's maybe not really liquid, how do you structure it in a way where you can still maintain said asset without liquidating it, but you can also maybe pay off the debt that's tied to it, so then you can actually change title, right?
So the conversation switches to scraping up, loans from 401ks to trying to maybe even liquidate some pre-tax money to be able to pay off a home equity line of credit that was less than $10,000. So I had the backup. I actually let Jeremiah get off the phone, and I said, okay, let's talk about this in a different way, which is you want to keep this house. You want to keep some other asset, as like a vacation asset, like a trailer that has a debt against it, because you want those items. Hey, there's a lot of things I want. There's a lot of things. And I remember getting an investment opportunity presented to me, which ended up to actually have worked. It was a friend of mine that says, hey, you want to put some money into this? It was $100,000. He goes, I think we're going to come out with I think you'll make $1 million on that $100,000. I'm like, what? Problem is, I didn't have the $100,000 to be able to do it. So of course I missed it. I want to be able to inherit something, but if you can't afford to actually do it, well then that's the reason why we have this process. And it's also the reason why we've looked at community property and step-ups and basis and helping families that own farms that were creating incomes for them instead of having to liquidate the farm just to pay estate taxes, things like that. We've had rules and regulations that have been adapted to be able to fit these situations, except when you just want something that you can't afford to keep. So sometimes you're just going to have to liquidate things. And I said, well, you just got to figure out what's most important to you. I'm like, is the camper most important to you, or is the house most important to you, or is it you keeping your house and not having renters in it, things like that? Like, you get deeper into the story, and now the answer is not anything financial. This is more just about financial discipline. That's it.
Yeah, I mean, and this kind of goes back to and also a conversation that I'm having with a lot of clients where you talk about the impact of money at what age you receive an inheritance. It brings to question, maybe you could effectively gift, or you could strategically gift to your kids or your beneficiaries before they reach that average age of inheritance of, it's like 60 or 65. Because in this case, they were older, they had these assets and they had a plan, but there's just kind of that piece missing where you got to understand what these dynamics are and the best way to approach it, especially around an inheritance like that. But I mean, from the inheritance standpoint, I just had this conversation with a client too, where they're talking about, hey, if we were to die and my kids were to receive this, and that's going to result in a big tax bogey. I'm like, well, not necessarily, because the way our tax code works is if you have an asset that's not held in an IRA, and let's imagine you bought it 20 years ago at, let's say, $100,000, and now that asset's worth $1 million. If you sold it, you're going to pay capital gains tax on it because it's based on your basis, the amount of money that you purchased that asset for. Well, when you pass away, you get what's called a step up in basis. So now whoever inherits or takes over ownership of that asset now, they don't have your basis from 20 years ago. They have your basis from usually the day you died. So then in theory, if that person was then to sell that asset right away, there's no tax consequence. They wouldn't owe any tax on it. So that's a big part of, considering how you look at assets, how you look at inheritance, how you structure your estate plan, understanding the tax side of things. But you can also look at too, when you're looking at specific real estate, giving your beneficiaries the option. Because maybe it's like, hey, you leave it to you. And in most cases, Brian, I think you've seen this too, where if someone inherits a house, even if the original owner thinks, no, they want to hold on to it. I've never seen it in all my years. Well, this actually might be the only one that we just talked about. So I retract that statement. Up until that phone call, I have never seen a scenario where one of the beneficiaries wanted to maintain that asset. Then it's usually the house or maybe a rental property or like a vacation or cabin. They liquidated the entire thing, distributed amongst beneficiaries, closed the estate, and kept it moving.
We're going to take a break. When we come back, I do want to add one thing. You can inherit something from somebody that you're forced to continue to pay, in theory anyway, and it is a timeshare. I'll talk about the perpetuity clause that's in it, but there's one simple process that, through all the scare, they could just file it and be done with it. We'll tell you how to do that, or at least how we believe you're supposed to do it when we come back. This is Real Money Pros.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
Back to the Real Money Pros.
We are back. This is the Real Money Pros, second hour of the program. If you missed the first hour of the program, of course, we're talking a lot about current topics, such as what's going on in Iran and maybe the extent of this war, is how deep and long it may continue to go and grind through our economy. What do you do as an investor? Listen to the first hour. Find us on our podcasting apps or any podcasting app. Just search us, the Real Money Pros. Or watch us on YouTube. Of course, you can catch those, all of that. Go to therealmoneypros.com. Phone lines are open, 979-59-MONEY. That's 979-596-6639. I had an attorney on the radio program with me probably 20 years ago, Jeremiah, and I had heard about, I think it happened from a phone call where somebody was talking about inheriting a timeshare from their parents and being forced to continue to pay it. Being told that their only option was to continue making the payments, or they could sell the timeshare, had to use the timeshare's brokerage, and then basically would get nothing for it, even though the timeshare was still selling new timeshares as brand new packages, meaning there's nothing different from the ones they own compared to the new one that they've got sitting on the desk. They could just say, we're selling this one. It's going to be the same price to the new people. These people were concerned that they would actually continue to be obligated to their parents' obligation, that they had been the ones that signed the contract. And it turned out, I was surprised that the attorney said that, yep, that's true. I'm like, what? You can actually bind somebody else when they weren't even part of the contract? And the answer was yes, and I don't really understand how it was even going to be focused. He says, however, and he started talking about it, how deep the industry had been created of attorney firms going and saying on like advertisements, so we can get you out of this timeshare. And he goes, and they probably can. He says they'll probably negotiate something because they're going to find weakness in the paperwork, but you're going to pay an attorney to do something you could have just done on your own, which is walked right into the probate court or walked into the courthouse and filed with the probate court your legal disclaimer of the interest of that part of the inheritance. You literally just say, I am disclaiming it and I don't want it. In essence, it throws it back into the probate court. Then the timeshare company is going to say, yeah, we're going to just reabsorb it. No more money's due. But the problem with that is it's just going to be a loss.
Yeah. So, I mean, if in regards to, okay, let's imagine that your parents own a timeshare, they both pass away, and now within that contract, it's like, well, technically your heirs, your estate still needs to maintain it, but it's looked at as
it's the perpetuity clause to the estate.
It's the perpetuity clause of the estate. Yeah. So essentially what you're saying, if I'm tracking right, is like within the probate side of things, you can basically disclaim that, because in general, because it's not too dissimilar from other assets that you could in theory inherit. Like, so let's imagine me and my 3 brothers. If my mom passed away and she had a car and she was like, hey, sell it, split it 3 ways, but I'm like, I don't care. So like disinherit me from that. Like I don't want it. Like, and that's not uncommon. I've seen that in my practice with clients and their kids, and they've said, hey, like we want to formally disinherit this, like doing it by the book and make sure that it's actually tracked and it's signed and properly done. So it sounds like
you have done one of those personally.
Yeah.
Yep.
So, I mean, you probably know this process more intimately than others. Yeah. But in this case, it sounds like it's kind of the same approach where it's like, well, we understand this is part of the estate, but we don't want to inherit it. So we're going to disclaim this, which basically takes again, just kind of throwing out a vague idea here. There's probably a lot more nuance to it to formalize it. But as that comes into a part of the estate, you just disclaim that, which then it's no part of the estate, which then means you're no longer on the hook to adhere to that perpetuity clause.
Well, there's reason to do it as well, which is if you're going to inherit, let's say, your parents' assets, but you really just wanted to pass it through to your children, so the grandchildren would get it directly. Maybe they're going to use it for college, or maybe you just don't want it to pass through your estate where you're going through and doing liquidations on things with cost basis and paying taxes at your personal rate, that instead you put it down to the grandkids, and it's tax advantageous maybe to them to do it because they don't have the same marginal tax brackets you've got. So that would be a reason to disclaim. And the process is just really simple, which is I just don't want the asset. You file it with the probate court, because you got to figure when somebody passes away and they've got, let's say, a timeshare, it's kind of sitting in purgatory, for the lack of a better way to describe it, because the people who are paying the fee to maintain that timeshare are no longer there, but their estate was obligated in so-called perpetuity to forever pay for it. And the probate's court process is to close the estate. And so really it's the court needs to wait for what's going to be the handling of this continued payment. Are we going to have to leave this estate open forever and it's always going to have to remain solvent until it's not solvent? Then it becomes another probate process to then, in essence, say that it is an insolvent, completely dried estate, and then it finally gets written off. Well, that's the objective of the timeshare contract, which is we'll just take everything we can because that's what they were willing to put into the contract and the other people signed it. But then if you just disclaimed it, it gives the answer to the probate court on how to handle the asset, and then it's done. And it was probably a free document.
Yeah.
No attorney necessary. You just be done with it.
I think just be very cognizant of going into those timeshare meetings.
Nonetheless, I am not an attorney, and I did not give anybody legal advice. I'm just saying that, from what I understand, was the solution to it from the attorney that was on the program. And this has happened several conversations now, and it surprises me every time.
Yeah, I got a handful of clients where they have a couple timeshares and they never use them. It's interesting. Like I don't have a client that has a timeshare where they're actively using it.
They always
to really
give
take
them away.
advantage of.
No, they show up at all the auctions for some 501c3 that you go to their dinner gala or gala. Is it gala or gala?
Yeah, I don't know. What is that, like indexes and indices?
I don't know. I'm just not that fancy. 979-59-MONEY. That's 979-596-6639. All right, so we promised we're going to get really back to the basics. We just did it on that topic. What you got next?
Okay, obviously tax time is right in front of us, and you're gathering your tax documents. You're giving them to your CPA. You're running the numbers through your turbo taxes, your tax acts, self-preparing, whatever the case is. And the reason why I wanted to bring this up is because I had a great conversation with a family member who's savvy, smart, makes good money, and just asking some really basic questions around an IRA, a Roth IRA, and really having no understanding. I mean, not to knock her, because again, she's so sharp in other facets of her life, but I mean, the reality is she's not thinking about this stuff. Like, probably never up until this point where she's like, yeah, I kind of read something, and like I thought of you, so I wanted to reach out and get your thoughts. So it's great. Let's bring it back to the basics, because I kind of got ahead of the car, assuming that she already understood those, and she was quickly confused. I'm like, oh, okay, let's bring this back, and let's really talk about what these accounts are, what their purpose is, and then how can you effectively use these for different strategies, such as tax savings or long-term retirement projections and all of that, and proper inheritance gifting. I mean, there's a lot of different routes that you can take. But in this particular case, high level of income between her and her spouse, and she has a Roth IRA, she has a traditional IRA, and trying to determine how much money she can put into one of those, which one should she put money in, which account should she put money into. And then there was the comment of, well, why don't I just do half and half? Why don't I put half of it in the Roth and then half of it in the traditional IRA? And then brought up the question, oh, well, my husband, should he be doing this too? And then, well, he doesn't have that. Can he open it up? And when do we have to do all this by? These are all great questions, and these questions are probably going to apply to a majority of you listening. So we're going to bring it back to the basics. We're going to talk about, and you probably will have time if you haven't finalized your tax return, if you can actually take advantage of a Roth IRA, traditional IRA, or if you're self-employed, maybe some other vehicles in that regard.
Many times in my career, I've been asked by my clients to meet with their kids to give them some financial education, do it for free. Ask yours to do the same thing. They'll do it.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and posters when you spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
listening to The Real Money Pros.
We are back. This is The Real Money Pros. Phone lines are open, 979-59-MONEY. That is 979-596-6639. I am Jeremiah Bates. He is Brian Wiley. We are Fiduciary Financial Advisors, here to answer questions. You have questions on how to file Social Security, what the best filing sequence is. You have estate planning questions. Maybe you received an inheritance and need to understand the tax consequences of that. Or maybe you're looking at setting up a will or a trust. What are the differences and why are they important? You have questions around retirement planning. You have questions around investing, this recent market volatility and where price of oil is going. And are you okay from a financial standpoint? Send it our way. Again, 979-59-MONEY. You can also visit therealmoneypros.com if you need to get in contact with one of the great advisors that we have access to across the country, by the way. Go to therealmoneypros.com. It's where also you can access our education archived content, and you can use the Ask the Experts features, which I do believe is on there. If it's not, there is a way to get in contact with us. It may not be under the Ask the Experts feature. Bottom line is you can email us, Jeremiah at therealmoneypros.com, Brian, B-R-I-A-N, at therealmoneypros.com if you have questions, and you will get a response. We're talking about bringing it back to the basics, and a lot of times fundamentals are generally the main theme for someone who is successful. And you can use every sports analogy till the cows come home, but you look at Tom Brady, Peyton Manning, and one of the big takeaways from a lot of their teammates, I mean, they're long and retired by now, but a lot of their teammates would say, no, they were spending a tremendous amount of time working on fundamental footwork, fundamental throwing techniques, just the basics that you would really focus on when you were just starting as a youth in these sports. So that's why I feel it's important, again, in light of these questions that I was getting asked from a family member, of just kind of basic functionality of these retirement accounts and Roth IRAs and traditional IRAs, and how much can you put into them and why you should use each one. And I think this is an important topic to talk about because, by the way, you still have time to make an election or a contribution for tax year 2025 into one of these set accounts. So let's get into it. We have what's called qualified accounts. Qualified accounts meaning that they have a special purpose from a tax standpoint. So, Brian, if I were to ask you if you wanted to save money for retirement and you were to say yes, I would say, great, there's a special account that we can purposely use to put money into for your retirement.
That has basically items put into it to discourage me for using it for any other purpose than that qualified purpose. That's generally the qualification. So if you think about it, college, you have a college account. The idea is that money is going to be spent for the higher education for somebody that will actually benefit an economy in theory. And so the U.S. government, our tax code allows for that and says there's some tax efficiencies available there. And it's the same thing with retirement. Could also be health savings, but continue on. So you just talk about a qualified account, and those qualifications then get special benefits.
Indeed.
Or penalties.
Or penalties. Or penalties, indeed. So here you are, and I'll just bring up the questions that was asked by the family member that called me, was, we had a high taxable income year. This is the first year we're working with a CPA. We were just doing tax prep, and the initial questions were, what tax documents do I need? we went through that whole item, which was pretty straightforward, and then the conversation got brought up of, well, there's an account that my husband was saying that I need to put money into, and it has to be done by April 1st. I'm like, okay. What he's referring to is a retirement account, an IRA, or maybe a Roth IRA. And yes, the deadline that you have to do a contribution for the previous year is April 15th. And in her case, she had a traditional IRA, which means that the money you put into a traditional IRA goes in on a pre-tax basis. So the best way I can explain this is, let's imagine in 2025, your total household income, your gross income that you earned through W-2 between maybe just you or you and your spouse, you combine it all together, that gross income amount was $100,000. So if you do nothing, then obviously you have standard deductions and things that could lower that. But
that just confuses it.
Yeah, but the reality is you're probably going to pay taxes on that number, on the total amount of income that you made, just for illustrative purposes. But if you took $7,000 and put it into a traditional IRA, you just reduce your taxable income by $7,000. So instead of paying taxable income on $100,000, you're paying taxable income on $93,000. So if you really wanted to know, well, how much money does that save me in taxes? Take whatever your marginal tax rate is. Let's imagine it's 22%, and you multiply 22% by $7,000, and that is the money that you will keep in your pocket from the Fed side, meaning just by moving your money into a traditional IRA, that is going to reduce your taxable income, which means it's going to reduce the amount of money that you're actually going to have to send to the IRS for federal income tax. Now, let's imagine you do the contribution. You say, great, we put that money inside the traditional IRA. We max funded it for last year, which was $7,000 if you were under the age of 50. That's great. Now the money's sitting in the IRA. Now you could just leave it in there, which I disagree with, because one of the big benefits of the retirement world, especially with these accounts, especially a traditional IRA, is that it is tax deferred. All the investment gains that you will have inside of that account, it's not taxable. Meaning you could buy a stock for $1, that stock could grow to $100, and you're like, holy smokes, this is great gains. I'm going to sell it and capture that $99 gain. So you sell it. Since that transaction took place inside of the IRA, there was no taxable event. There's not going to be any tax document that's going to be generated where you have to report that taxable gain. That's where that tax deferred status comes in. So you get that through the life of your traditional IRA or Roth IRA for that matter too. So you get the tax benefit for the contribution, like we just talked about. You get the benefit of the tax deferred growth within inside of the account. Now we're getting to the point where you're in retirement. Let's imagine you're 60 years old, you cut the corporate cord, and you're ready to start. You're in that season of life where you're no longer adding money to your accounts. You're removing money into the accounts because you want to go on trips. You want to gift your grandkids and all of that great stuff. So remember, that contribution, the money going into the traditional IRA, you never paid taxes on it. So you got to be of the understanding that when you pull money out of the traditional IRA, you will pay taxes on it, meaning what that looks like in reality. Let's say that you're in 2026 and you took out $10,000 out of your traditional IRA. We're going to fast forward the clock to maybe February of 2027. You're going to get a tax document that's known as a 1099-R. That's going to say, hey, you took out $10,000 of your traditional IRA. Make sure you put that all together with all your other tax documents, so when you actually file your return, that $10,000 is going to be added in as income on top of all your other sources of income. And then that's going to determine where you fall as far as the marginal tax brackets, what your effective rate is, how much you pay on state income tax. So that is the simple functionality of a traditional IRA. And if you feel that you're running into some high tax headwinds from 2025, you still could have an opportunity to open an IRA and fund it, by the way. Because that was one question that got brought up. She's like, well, because she brought up her husband. She's like, well, he doesn't have an IRA. I'm like, well, you can open one and still fund it. She's like, you can do that? I'm like, absolutely. You have plenty of time to do it.
Yeah, log into an online custodian, a big one usually, like, the popular ones.
A Schwab, a Fidelity,
E-Trades, yeah, something like that. You can actually open it up on the last day, so April 15th. What is that tax filing deadline this year?
April 15th.
Oh, it seems to fall on weekends here lately, which will push it out to usually the 16th or the 17th. But all right, I'm going to give you a real good visual on what he just talked about. So imagine now you make $140,000 as a household, and you're married. So you file a joint tax return, and you get a $32,000 deduction, roughly. So I'm just doing round numbers, and that would leave $108,000 that is subject to the first big tax bracket, which goes all the way up to just over $100,000 and starts at roughly $25,000. That's a 12% tax bracket. If you actually take the first tax bracket, which is any income between $0 and roughly $25,000 is taxed at 0, and if the next bit, $25,000 to $100,000, is taxed at 12%, you would say, oh, the effective tax rate on $100,000 is 9%. Okay. Now, if you had the $140,000 there and you know that you get the standard deduction, you're looking at saying, well, I'm going to have to pay the taxes on the $8,000, but I'm going to have to pay it in the 22% federal tax bracket. So roughly $2,000 is going to come out of your pocket to pay income taxes on it. However, if you were to defer in this married situation, $4,000 each to a tax-deferred IRA, well, then you'll remove the $8,000 from your income on the tax return, and there will be no taxes paid on it until you withdraw the money in the future, which hopefully would be in those lower tax bracket years, thereby saving you probably at least half that tax money in the long run. If you could save $1,000 in the long run per year all the way up until you retire, I'm going to guess it would actually do something for you that you would appreciate if you just took advantage of that one idea. That is taking it back to the basics, and we're trying to show the impact of these incremental, efficiencies that you should be adding to your portfolio, but where and how do you get started? I want to talk about that when we come back. Who do you contact? Who do you look for? What type of advisor do you hire? Do I hire a CPA, an EA? What am I doing? This is Real Money Pros. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
We're back to the Real Money Pros.
We are back. This is the Real Money Pros. Go to therealmoneypros.com. Please sign up for the newsletter. Our sponsors like seeing it. Plus, they're going to give you great information that you can actually utilize, such as tax topics and perhaps estate planning topics. Whatever the topic is, our sponsors, they are well written. They are experiential. There's something that you can go in and actually apply it to your situation. And it's all free to you. Just join the newsletter. Go to therealmoneypros.com. You can also provide feedback on the program, questions for us, the actual advisors that are broadcasting the program, and the rest of our team, which includes Nick and Alex here in our office, and Alec, by the way. And which kind of leads me off to that part of the discussion as we end this second hour of the program, Jeremiah, which is sometimes people have a hard time just trying to figure out where to get started. So oftentimes, like you might have, let's say, a 401k that is provided by your employer. You'll notice that they'll have some sort of an annual meeting where you can go in there and learn how to use the plan. Those are great places to start. Usually the person that is doing the 401k education for them is somebody that is either just doing 401ks. They may be newer in the industry, but they're usually full of knowledge and ready to start to share it. If you're looking for what is the most effective, or in theory, should be the most effective, best way for you to get really efficient investment and tax advice would be from an accountant. One that is probably gregarious, probably really understands you, your objectives, your weaknesses, your strengths, your fears, and so on, that would provide education and time to be able to sit. The other part is sometimes it's tricky working with a couple because maybe he's handled the finances and she handled the family, and so she's got a lot of catching up to do. You've got to make sure that whoever you're working with is going to speak to both of you and get you both up to speed at the same time. The problem with what I was talking about with that CPA or that EA is they don't exist, in my opinion. They're really hard to find. I know several very amicable CPAs, but they also speak to me, to the advisor. We kind of speak their language. Find a great financial advisor who is eager in the business, that has a hunger for their own knowledge, not afraid to say they don't know, but really is in the objective of trying to help you make gains in your efficiencies or what your plan is. And in that process, they're going to learn a ton. I actually really like younger financial advisors for the getting started type things because that's usually what they're focused on. And I take myself back to that, which is when I was brand new in the industry. I was trying to find clients, and I found that I just was able to interface with new investors. The problem is there's no money there for me to be able to be a good advisor if I don't earn an income, because these people couldn't pay me. So, but it was a gradual process. But on the other hand, I still go back to the greatest compliment my clients will give me right now is when they say, hey, will you meet with my daughter or our son? They're getting started. They're doing this. And that is one of my favorite requests because that means one is they trust me. But second is it gives me an opportunity to share a whole bunch of advice and knowledge that I've accumulated because I don't tend to interface with that brand new investor as much as I used to.
Yeah, and as much as you and I love the complicated cases of,
it's fun.
I have 5 different businesses and their partnership, and I got this over here and that over there and this. It's like, oh, this is great. It's like a puzzle we can start piecing together. As much as we love those, I mean, speaking for myself, I do appreciate meeting with, the kids of my clients, especially if they're just starting out a career, and it's like, how do they set up a 401k and what does this mean? And how do they set up their withholding? And like, how should they look at investing over the long term, Roth versus traditional, like we just talked about? It's like, those are so fun, and it's good to bring yourself back to those fundamentals or basics, at least in my eyes, and give them that education. So, in my mind, they're getting started off with a good foundation that's applicable, that they can actually execute and put in place right away. And then it's just building on top of that as they get more sophisticated and as they grow, their investments grow, their income grows. And then we just keep adding in these layers of, like we said, efficiencies, whether that's from tax planning, that's investing, and looking at various accounts that are the best vehicles to achieve that outcome of, maybe those kids are now having kids. So now our clients are now having grandkids. And now how do we approach the grandkid side of things as well? So no, it's great. And it is, I agree, Brian. It's just a great nod where anytime you work with a client, they refer a friend or family member, wants you to speak to their kids. In my mind, I've always said it's confirmation that you're doing the right thing when you get that response from the people that you work with.
I have a fun one because if he's listening right now, he's going to know that I'm talking about him. But probably about 13, 14 years ago, I was broadcasting in the city he lives in, and he contacted me. He says, hey, I really want to learn about this stuff, and I want to figure out how to get started investing and so on. And he paints cars for a living. Okay, so he makes actually great income painting cars, but he's a veteran and his wife is a veteran. There's just a lot of discipline behind them, and they just became determined to learn. And it was just a couple weeks ago, he had called me and says, $1 million. I'm like, what? He goes, that's how much we've accumulated. Well, here's the greatest part of it. He's never been a client of mine. We met because he was on the radio. We tried to develop even education materials to share with other people, and he's like, yeah, that would work. And he fixes my cars. So, especially after my son drives them. But anyhow, yeah, he does. He will repaint, and he's been, fixes that. And I just give him the financial advice last year when President Trump had announced the tariffs. He called me just like he normally does. He's like, is there anything we should be doing here? And I said, oh, man, I got some ideas to share with you. And that's why he contacted me a couple weeks ago. He says, what do I do with these? It's like, look at this. It's up that much. And this was all him. It was him reaching out and asking, because when we started chatting, he had nothing there. And I taught him how to do it. And I feel so good about that. It was like one of my favorite feelings as an advisor all this time. It was like, man, I could have just made money doing that. Like just doing the financial education or coaching people, like that would have been so rewarding to do through the entire career process. But the problem is that beginning investors, unless you've got some really big national campaign as a radio show host, which is a very popular one that has done very well, mortgage, insurance, writes books, does presentations, seminars, and all these things, that's great. That's the way you monetize it. But yep. I'm a financial advisor, and I monetize by working with clients and actually them paying us. But it's, again, just asking those questions. And if you're trying to get started, just start asking. Ask your financial advisor, ask your parents who they use, or ask somebody that you admire the way they handle their finances, who they use. See if you can get some free time. Maybe you have to pay $200 for an hour to go in and get a great education. But do it. It's worth it.
Yeah, no, it is worth it. And it also can work on the flip side where, I just met with a client where their tax situation is not complicated at all. Like when we rifled through everything, it's probably 4 tax documents. It's all fixed income sources. I mean, there's just zero complications in their situation. Which again, you got to appreciate. There's no need to make things more complicated than they need to be or have all this, outside of Kansas. It's like, let's simplify and let's make sure the simplification is working to what we need it to be, which it is. But in this case, they were paying a hefty amount, like a hefty amount for just tax prep. Yep. Maybe a little bit of advice. But I said, where did you get the idea to go ask that question? I was like, well, from you. I'm like, exactly. So they're like, where are we going to get the tax advice? So I'm like, well, the tax advice you've already been getting is from me, right? Which I mean, the tax education, I should say. You're getting the tax education, which you're then bringing to the tax professional. It's like in this case, no. I mean, we've been doing the same route. You don't need to be extending yourself that far for just that simple, that simple piece that arguably you could do on your own, right? But the sentiment being, that value that you can get out of exactly what you said, Brian, like paying $200, $300 or whatever it is to focus on what you need to focus on. So you get some ideas. Maybe you're thinking outside of the box with someone who has experience and has worked with other clients in that same situation. It's like, well, have you thought about this? Have you thought about that? It's like, whoa, I wasn't. And now that just opens up a whole range for you that then hopefully you can be in the same situation as that gentleman who paints cars who you fast forward the clock 13, 15 years are now sitting on $1 million.
Yeah, which by the way, most of that is not investment that is done inside the markets. That was real estate. And it was the same thing. It was just really smart questions. He's asking about leverage and how do you actually acquire a second property when you've already got one leveraged and they had renters in it and so on. And they wanted to build a real estate portfolio, but he also wanted to learn about stocks and investing. It was just getting started. And for those of you that know that you want this at some point, you've got to actually just get started. When it matters to you enough, you'll do it. But if you're not doing it, it just doesn't matter to you enough. Maybe you're picking up tidbits of information, and maybe something we say will resonate with you and help you get started. We are the Real Money Pros. Have a great weekend.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefit.